Happy Wednesday. Great start to the day. 2-1 advancing to declining stocks. China's still closed, but Europe is mostly to the upside. And folks, when you've got financials up, tech up, healthcare up, consumer discretionary up, that's what you want. That's how you get 2-1 advancing to declining stocks. We are starting to see some new highs spread out a little bit, not dramatically, but even on the Dow list, Merck new high, Apple new high, Boeing, that's a historic high, Cisco, Disney, also at a new high. Microsoft's at a new high. Lilly and Pfizer, they're at a new high every single day. But these are big cap names that we've seen moving to the upside. The main trade war story is starting to unwind. We've said for a long time, the story is very simple. Go long U.S. small caps, short China, and go long India. These are starting to unwind. We talked about this yesterday. Look at the small cap situation. Small caps have been for sale for the month. This is 1 month. The white line is the S&P. The orange line is the Russell 2000. Russell's down 5% in the last month. The S&P is up 1%. Let's look at China stocks. Jim just referenced this. He's absolutely right. They've started rallying. There's the Shanghai Stock Exchange. Again, this is the last month. That's the orange line. Shanghai and the S&P. Shanghai Stock Exchange up 4% since the beginning of September, and it's outperforming the S&P 500. That is very significant turnaround because it's been a loser all year. Finally, we don't mention this very much, but Indian stocks play in here too because Indian stocks are considered a safe haven in the trade conflict. You see the Bombay Sensei Index, which has been outstanding all year, a big player. That's the orange line in the last month. That has been moving to the downside. The Sensex, that main index in India, down 7%. The S&P 500 is up 1%. All right, what does all of this mean? The main market trend, remember I keep saying that the marginal mover of the stock market has been the trade war conflict. And if that starts unwinding, things change, and that's what's happening. So remember the main play. Number one, go long U.S. small caps in the trade war conflict. Number two, short global industrial names. Number three, short China and emerging markets. And number four, go long Indian stocks. All of these we have just shown you, so the Boeing new highs there, has started to change and unwind. And this is a sign that investors are less concerned about the trade war. Now, maybe they're going to be wrong. Maybe the China thing will last a lot longer than people anticipated, in which case you'll see the market react to that. But right now, the market is telling you there's a lot less concerns on trade war issues. The other one that we're still trying to figure out when it's going to turn around is the whole bank dilemma. We've talked about this many times. Here you see in the last several months, there's the S&P 500 on the white line, and there's the bank stocks on the orange line, and they just consistently keep underperforming, and the underperformance has increased in the last month. We even have a number of small banks at 52-week lows, and Morgan Stanley yesterday at a 52-week low. We've talked about the reasons about this. The main one is the yield curve being flat. Remember, the Fed can do all it wants to raise interest rates on the short end, but if the long end doesn't move much, you've got a flat yield curve, and that's a problem for the banks. That's what matters, the yield curve. Loan growth has been lackluster, 1.5% to 2% overall. All right, not bad, but still not enough to get anybody excited. Deposit costs have been higher. They're paying more. Go get a CD these days. The banks are paying more to their customers. That's great news for the customers, not so good for the banks. And overall costs, remember they're spending a lot of money on technology to continue to enable you to bank mobily. That costs a lot of investment in talent, a lot of investment in technology. Bottom line is, you really want to get the market moving higher, we need a little bit more energy in those bank stocks. At least today, we're seeing that. Carl, back to you.